In this video, we are going to cover the numerical portions based on the concept of deductions which we have covered in our previous two videos, and I hope these two questions will help you in solving the questions based on the assessment of individuals which you are going to cover in your next sessions also. Hello dear students. So in this video, we'll be solving the questions based on the deductions which we have covered in our previous classes, right? So let me just first start with this question. X, aged 34 years, a resident individual, has business income of rupees 3,45,000 rupees and property income of rupees 2,95,000 and bank interest on FD rupees 1 lakh during the previous year 2021. He has done certain contributions. Number one is life insurance premium on own life policy taken in 2011, and the amount is paid by X in cash on 31st March 2021. Sum assured is rupees 2 lakh. Then he has contributed towards pension fund of LIC, medical insurance premium on the life of dependent father, Mediclaim insurance premium on the life of dependent brother paid by check on 26 May 2020. Mediclaim treatment of dependent brother being a person with disability, and deposit with LIC for the maintenance of the dependent brother being a person with disability. He has also donated to a political party during the year by check. What we are required to do? We have to find out his taxable income, assuming that he is not opting for the alternative tax regime of section 115 BAC. Now what is this alternative tax regime of section 115 BAC? If the assessee opts for this regime, that is under section 115 BAC, then in that case he cannot claim the deductions under section 80C to 80U, provided he can claim the deduction of any contribution made by the employer towards the NPS scheme. So 80CCD2 is allowed, but all other deductions are not allowed. So let's just first calculate his gross total income and then we will start with the deduction part. So in this case, a resident individual has business income of rupees 3,45,000. So here we have mentioned his business income of rupees 3,45,000. Next, he has property income of rupees 2,95,000. So here we have added his income from house property 2,95,000. Next, bank interest on FD rupees 1 lakh during the previous year 2021. So bank interest on FD, this is nothing but his income from other sources. So here we have written this is income from other sources, that is the bank interest income on FD rupees 1 lakh. So he has total income of rupees 7,40,000, which is known as the gross total income. So we give the deductions from the gross total income under the sections 80C to 80U. Now let us start with the deductions part now. Number one, life insurance premium on own life policy since 2011 paid by X in cash on 31st March 2021. Sum assured is rupees 2 lakh and the amount of premium paid by him is rupees 30,000. So if you can recall, if the assessee has taken life insurance policy on his own life or for his spouse, his or her spouse or children, he can claim the deduction under which section? The deduction can be claimed under section 80C, right? And this is for LIC policy. Next question next thing that we have to check is how much amount of premium is deductible. So if the policy was taken before 1st April 2012, in that case the limit is 20% of the sum assured. So here the sum assured is rupees 2 lakh. 20% of this 2 lakh would be 40,000. Right? So the maximum amount that he can claim is 40,000, although he has paid rupees 30,000. So we have allowed him rupees 30,000 here, right? Had he even paid, had this amount would be 50,000, we would have restricted it to 40,000. Next is the contribution towards pension fund of LIC. So we have also covered this while doing our deductions part. If the assessee is contributing any fund towards LIC pension fund, he can claim the deduction under which section? 80CCC. So this is our 80CCC pension fund, right? And he has contributed rupees 12,000. So we have claimed 12,000 here. Next is the Mediclaim insurance premium on the life of dependent father. His age is 64 years and the amount of premium paid by the assessee is 40,000. So when we talk about mediclaim insurance premium, we deal with section 80D. And section 80D says that the mediclaim insurance premium can be paid by the assessee for his family or for his parents. So when we talked about parents, parents may be dependent or independent. So even if this father would be independent, he would have claimed the deduction here, right? Next comes the amount, how much amount is deductible. So 80D says for an individual or for parents who are below the age of 60 years, the amount is 25,000, and if it is above 60 years, that means for a senior citizen, there is an additional deduction of 25,000. So the maximum amount that can be claimed in respect of a senior citizen is 50,000, and here he wants to claim 40,000. So that is why here we have allowed him 40,000. Next comes mediclaim insurance premium on the life of dependent brother paid by check on 26 May 2020. Please keep this point in mind that dependent brother is not included to claim the deduction of 80D. To claim the deduction of 80D, we can pay the mediclaim insurance premium. The assessee can pay it either for himself or for the spouse or for children or for his parents, but not brother or sisters. So this deduction is not allowed. Next, medical treatment of dependent brother being a person with disability. Here we are talking about the medical treatment, and medical treatment of whom? Dependent brother who is suffering from disability. So in our previous class also I told you that you have to keep this thing in mind, that dependent disabled calls for section 80DD, that is dependent disabled. So we are dealing with 80DD here. He has spent rupees 5,000 on the medical treatment of his brother who is suffering from disability and is dependent on Mr. X. So here he can claim the deduction under section 80DD for dependent disabled. Right. Now, to claim the deduction, you have to keep the point in mind how much amount is deductible. So 80DD says that the amount of its deduction of rupees 75,000 is available irrespective of the amount of expenditure. So although he has spent rupees 5,000 on the medical treatment of his brother, but since there is a fixed deduction, we are allowing him rupees 75,000 as the amount of deduction under section 80DD. Now after this 80DD, there comes the section, this contribution deposit with LIC for the maintenance of the dependent brother being a person with disability, rupees 20,000. So he has also deposited with LIC for the maintenance of the dependent brother who is suffering from disability, rupees 20,000. See, we know this thing that LIC can be taken for the assessee himself, for his children, for his spouse, and not for dependent brother or sister. So this deduction is again disallowed. This will not be allowed here. Next is he has donated to a political party during the year by check rupees 3,000. So in our previous video only we have covered this section, donation to a political party. 3. The donation to a political party can be made either by a company or an individual or HUF, right? So since we are dealing with Mr. X, he is an individual and he has donated to political party by check. So he can claim the deduction of 100% amount donated under which section? The section is 80GGC, donation to political party. So after given this deduction of rupees 3,000 under section 80GGC, these are the deductions which are available from section 80C to 80U. From your gross total income, you have to allow these deductions, and finally you will arrive at this taxable income which comes out to rupees 5,80,000 in this case. So I hope these deductions are clear, that is 80C, triple C, 80D, double D which deals with dependent disabled, and 80GGC donation to political party. On the similar line, we are going to solve the next example to bring more clarity on this topic deduction. Here we have this individual who is of 45 years age and he is a central government employee. For the previous year 2021, he gives us the following information. His basic salary is rupees 3 lakh. Allowances from government which are chargeable to tax rupees 80,000. Government's contribution towards NPS is rupees 32,000. Contribution of X towards NPS is rupees 35,000. During the year, he has deposited in PNB fixed deposit for the purpose of availing reduction under Section 80C, rupees 16,000, and he has contributed to an approved annuity plan of LIC for availing reduction under 80CCC, rupees 1,05,000. He has also taken a loan for the education of his niece who is dependent upon him. The loan was taken for MBBS. Interest on such loan is rupees 45,000 for the year 2021, out of which he has paid only 13,000. Besides, he has paid rupees 1 lakh on account of repayment of loan. Next, he has interest income from saving account in SBI rupees 40,000. What we are required to do in this question? Again, we have to find out his taxable income, assuming that he does not opt for the alternative tax regime of section 115 BAC. I have already discussed this part in the previous question. So if the assessee opts for this alternative tax regime, he cannot claim the deductions under section 80C to 80U, but the deduction of 80CCD2, that is the contribution made by the employer towards NPS, is allowed in the new regime also. Fine. So to find out his taxable income, first of all we will find out his gross total income, and to arrive at the figure of gross total income we need to calculate his income from salary. So he has basic salary of rupees 3 lakh. Next, he is also getting allowances from the government rupees 80,000. After that, government's contribution towards NPS is 32,000. So what is the treatment of this government contribution towards NPS? First, you will include this amount to his salary income to arrive at his gross salary, and later on the assessee can claim the deduction of this government contribution towards NPS under section 80CCD2. So first of all, it will be included in his salary income. Later on the deduction can be claimed. So his basic salary plus this allowance of rupees 80,000 plus this contribution of government towards NPS 32,000, this makes a total of rupees 4,12,000 of his gross salary. So from gross salary you have to give a standard deduction of rupees 50,000. So here from 4,12,000 we will give a standard deduction of rupees 50,000. After allowing this deduction of 50,000, you can arrive at his income chargeable under the head salaries, which is rupees 3,62,000 in our case, right? So his income from salary has been calculated. In the last part, it is mentioned that he is also having interest income from saving account in SBI. So this interest income is chargeable under the head income from other sources. So he has this income from other sources, which is saving bank account income, 40,000. So let's add this to arrive at his gross total income. So salary income 3,62,000, income from other sources 40,000. His gross total income will be rupees 4,20,000. So you have to allow the deductions from the gross total income. Deductions are allowed under section 80C to 80U. Now we are going to discuss these deductions one by one. Number one, contribution of X towards NPS and government's contribution towards NPS. Then during the year he has deposited in PNB fixed deposit for the purpose of availing deduction under section 80C. So if you have made any fixed deposit, you can claim the deduction under section 80C. So he has deposited rupees 16,000 here. So we will give this deduction of, this should be 6,000. So we will give him the deduction of rupees 6,000. Next, he has also contributed towards this annuity plan of LIC for the purpose of availing deduction under section 80CCC, rupees 1,05,000. So this 80C 6,000, 80CCC 1,05,000, and contribution towards NPS made by the employee. These three sections together make a ceiling of rupees 1,50,000. That is 80C, CCC, and 80CCD1. So here he has contributed rupees 35,000 towards NPS. For that, there is a ceiling of 10% of salary, and salary here means basic salary. So his basic salary plus DA forming part of retirement benefit. We do not have that DA component, and fixed percentage of commission on turnover achieved by the employee. So since the DA part is not given in the question, we do not have the commission. So here salary for this purpose would be considered as basic salary only, which is rupees 3 lakh. So if you are going to calculate 10% of this 3 lakh, that would be 30,000. Although he has contributed 35,000, we will restrict it to 30,000 only to be claimed as deduction under section 80 CCD1, right? So that is why here I have written 30,000 instead of 35,000. Next, before allowing him these three deductions, you have to check the ceiling of rupees 150. So here 6,000 under 80C, 1,05,000 under 80CCC, and 30,000 under this 80CCD1. This makes a total of rupees 1,45,000. So we can allow him this 1,45,000. Had this been 1,51,000, we would have restricted this to 1,50,000 only, because that is the maximum ceiling of these three sections together. Next, after completing the section 80C, CCC and CCD1, let's discuss the contribution made by the employer towards the NPS scheme. 32,000 has been contributed by the government here, right? So in the case of a government employee, the contribution limit is 14%. In the case of any other employee, this limit is 10% of salary. Since he is a government employee, we will give him the deduction under section 80 CCD2 up to 14% of his salary. Salary again here would be rupees 3 lakhs. So if you are going to calculate 14% of 3 lakh, that would be 42,000. And here he wants to claim 32,000, so we can allow him 32,000 here. Had this amount be 52,000, this would have been restricted to 42,000. Fine. So this is how you can claim the deduction of any contribution made by the employer towards the NPS. What is the tax treatment? First, that will be included in his salary income, and later on that can be claimed as deduction under section 80 CCD2. Next, here only we have discussed this, while discussing this NPS, I have discussed this section, that is 80 CCD 1B, where the additional contribution made by the assessee can also be claimed as deduction up to rupees 50,000. So as we can see, this employee, Mr. X, he has contributed to NPS 35,000, right? And while allowing him deduction under section 80 CCD1, we have allowed him only rupees 30,000. So since he has contributed 35,000 and we have allowed him only 30,000, he can claim the deduction of balance rupees 5,000 under section 80 CCD1B, which is out of the purview of this ceiling of 1,50,000, right? So from 35,000, the contribution which he has made, 30,000 which he has already claimed in the section 80 CCD1, the balance of rupees 5,000 can be claimed as deduction under 80 CCD1B. Next comes the section, he has taken a loan for education purpose of his niece. The loan was taken for MBBS. Interest on such loan is 45,000 for the year, out of which he has actually paid only rupees 13,000, right? And besides, he has paid rupees 1 lakh on account of repayment of loan. So when we talk about the education loan, we have seen that the loan can be taken by the assessee either for his own education or for the education of his spouse or relative or any other children who is dependent upon him. He is the legal guardian. So he has taken the loan for this niece who is dependent upon him. The loan has been taken for MBPS, and the interest, the total interest due is 45,000, out of which he has paid only 13,000. So deduction can be claimed under section 80E. E is for education loan, so we are going to claim the deduction under section 80E. Next thing that you have to keep in mind is, while claiming the deduction, which amount should be deducted, right? So although the interest amount is 45,000, he has only paid 13,000. So whatever amount of interest he has paid, only that can be claimed as deduction under this section. So here we are allowing him deduction of only 13,000. Next thing is, whatever amount you are repaying, that cannot be claimed as deduction under this section, because this is only for the interest part, interest on education loan, and not for the repayment of education. right? So this is our section 80E. Next is, he had this interest income from saving bank account in SBI 40,000, and we have included this interest income while calculating his gross total income, right? So since he has this interest income, you have to see whether this assessee is a senior citizen or not a senior citizen. Had he been a senior citizen, we would have claimed a deduction under 80TB. Since he is of the age of 45 years only, he is not a senior citizen, so we can claim the deduction of this interest income, interest on savings bank under section 80 TPA, and the maximum amount deductible is rupees 10,000. So this was our gross total income of rupees 4,20,000, out of which he can claim these deductions under various sections right from 80C to 80U, and this is the net income, that is rupees 2,19,000. So I hope with the help of these two examples, this concept of deductions is clear to all of you. Thank you, students. Happy learning.